I should point out, you're not a crazy gold bug. Let's start that off number one. So I ask you, is Texas crazy?
Texas is not crazy. I think they're being very prudent. By the way, I brought an example of contraband. This is a solid gold coin. 80 years ago, this would have landed you in jail, but fortunately, we're free to own them today. Now, look, Texas is looking ahead. They have close to $1 billion of state pension money and various state assets in gold. Right now, that gold is in New York. It was confiscated before. We saw the deposit confiscation in Cyprus.
Right.
We should expect more of these around the world. So they're just saying a very simple thing. We'd like our gold here in Texas. Thank you very much.
But what possible reason could the government have for taking states' gold?
Well, the reason is that the greatest economic problem in the world today, the one the Fed is facing, is deflation. Now, the Fed is doing everything possible to create inflation. What are they doing? Cutting rates, quantitative easing, Operation Twist, nominal GDP targeting, forward guidance, currency wars. They're doing everything, but it's not working. When all else fails, the inflationary numeraire of last resort is to devalue the dollar against gold. I like to say gold never changes in value. It's just currencies go up and down. And so this is what happened in 1933, as you just reported, Alex. The Fed couldn't, the Fed and the Treasury couldn't solve the deflation problem, so they said, we'll devalue the dollar against gold. Now, gold never goes up in isolation. If gold goes up, everything else goes up.
But there's not enough gold in the world to sort of sop up our money supply at about $15.50 an ounce.
Well, the thing is, people say there's not enough gold, but there's always enough gold. The question is price. At $15.50 an ounce, there's not enough gold to support world finance and world trade. But at $7,000 an ounce, there's plenty of gold. And that's what Roosevelt did. There wasn't enough gold at $20 an ounce, but at $35 an ounce, that's a 75% increase. Now remember, the 1930s, greatest period of deflation in American history, gold went up 75%. Today, deflation is the enemy. I expect gold to go up again when the banks get desperate enough. They're not there yet, though. It's not happening tomorrow right away.
So just to break it down, the state wants to move its own gold. It also wants institutions like pension funds to dump some government debt, buy more gold, store gold in the depository. Also, private citizens can put their gold there. Why would you trust Texas more than the Fed?
Well, because Texas doesn't have a history of confiscation. The Fed does. The United States government does. I mean, just talk to, Syria, Iran, North Korea, Libya, a lot of Cuba, a lot of other people about confiscation. We got bare aspirin. We took it from the Germans in World War I. So the history of freezes and seizures by the U.S. government is long and storied, but Texas doesn't have that history.
And is Texas the only sovereign state perhaps that's doing this, or is this a trend that we're seeing?
They're the only one doing the depository. There are 13 states that have pending legislation to make gold legal tender in the state. I don't think that's much of a solution because you still have to pay federal taxes. State law can't trump federal taxes. But a depository is different. They're saying you've got the physical, feds, go get lost. If you come looking for the gold, they're going to tell them to go.
But this is along the same lines of Germany taking its gold out of New York as well, right?
I think that's a very important point, Alex. This is part of a larger global remonetization of gold. Germany's taking their gold back. Azerbaijan, small player, they're taking their gold back. Hugo Chavez, Venezuela, they got their gold back a couple years ago. It's being debated in the Netherlands. There's a referendum coming up in Switzerland. Texas says we want our gold back. Texas is just acting like Germany. People, I have a lot of friends in Texas. I have a lot of respect for the state.
Texas acting like Germany. You would never hear that.
No, but the point is, people want to say, they're Texans, they're crazy. Well, Angela Merkel's not crazy. Texas is doing what she's doing. So I think it's a very serious move on their part.
What's the probability that this actually passes, this bill?
I think based on my discussions with folks in Austin, the odds are good. It's getting bipartisan support. Of course, Governor Perry's on record supporting it. They have a short legislative session, so it should move fairly quickly from here.
Now, gold prices have been falling, though, recently, despite the fact that we see the BOJ really committing to quantitative easing. What does that do to investor psychology, though? Well,
gold is actually up 25% in the last 3 months, but it's up in yen, not dollars. And this is where the currency wars and the gold dynamics come together. When you think about cross rates, it's a zero-sum game. Not every currency can go down against every other currency at once. So gold is always rallying somewhere. Right now it's rallying in yen. And if you wanted to get fancy, you would short yen by borrowing, buy gold. When the yen gets to, say, 110, unwind that trade. Then you want to short sterling and buy gold. and then at the end of the day, it'll come back to dollars. Gold's not going to do much in dollars, in my view, for most of the rest of the year. I look for the dollar gold move late this year, early 2014. But in the meantime, as Jimmy Buffett says, it's 5 o'clock somewhere, and you can always make money in gold. But you have to pick your currency. That's where the currency wars and the gold come together.